Hey, Rebel Bankers, welcome back to the Real Estate Money School. I'm your host, Chris Noggle, and I'm here with not just any guest, a Swedish guest. So Daniel Wood with Momentum Property Education, they're in Sweden. So you might be thinking, like, we're in the US, why are we talking to someone in Sweden? Well, the interesting thing is he's a master of disaster when it comes to raising funds. So isn't that what you're looking for? You're looking for money for your deals? Well, what they do in Sweden and what we do here in the States is it's pretty much the same darn thing, spun a little differently. You know, the currencies are a bit different, but outside of that, it's the same darn thing. And that's what you have to start understanding, that money and how money really works doesn't really change just because our money's green. And Daniel, what color is your money?
Well, right now, they've actually changed our money. It looks like monopoly currency now. So it's just all kinds of weird colors.
I got monopoly all over the place. So, you know, our money's green and theirs is the monopoly money. But nonetheless, it all works the same, folks. It's not about the actual money. It's what money does. It's how money works. And that's what we're going to talk about today. But before we get into Daniel and his story, let's talk about all of you. Let's talk about your journey to becoming a Rebel Banker. Now, if you watch my podcast, you've been hearing about this. I'm going to challenge you because education is one thing. Listening to podcasts, watching YouTube videos, gathering knowledge, that's all good and great. But until you take that knowledge and actually apply it, nothing's going to happen. You know, some people say knowledge is power. That's not true. Knowledge is only power if that knowledge is applied to actually push you forward. And that's what we're trying to do, right? Your journey to being a Rebel Banker is there because you want to excel or you want to catapult forward faster, smarter, and more efficiently. Well, this is going to help you do that. So here's the challenge. I want you to have my books right there, Mapping Out the Millionaire Mystery and The Private Money Guide. And how I'm going to do that is I'm just going to give them to you for free. And all you need to do is take action. What action? You got to go to my website, chrisnaugle, Naugle.com, and just click on the resources tab, 2 swipes on the mouse, and right there, free book. You can buy 1, you can get 2, and all you're going to do is if you want the actual book, you pay the shipping, and if not, tell me you want the ebook and I'll email it to you. So that's all there is. That's the challenge. And that is designed to challenge you to actually take action on something. So let's dive into Daniel and Momentum Property Education. So tell everybody a little bit about what you do in Sweden.
Well, first off, thank you so much for having me on the show, Chris. Really appreciate it. And love that you're starting out the podcast by giving everyone your book for free. That's so nice of you. So again, thank you for being here, for letting me be here. So yeah, my background is as a property investor. What makes my journey a little unusual is, as you said, I'm in Sweden, but I don't invest in Sweden. I invest in the UK. So in England, for those who don't know where the UK is, it's the language we're speaking now. So we invest all over the UK. We have done it remotely. So I've been able to build a team that handles all the finding the deals for me, that handle the project management, the refurb, the letting, all those details, which has allowed me to focus very much on the funding side because they handle all the property sides. The only part of the equation left for me to do is really choose which deal I want and then how am I going to pay for it. So for the past almost decade, that's what I've been focusing on. How do I find the money to do as many deals as possible and to do it in a way that keeps us safe, our investors safe, and makes the deals go as well as possible.
I love that. I love that. And, you know, I think there's an interesting thing about that. You got to the point where you weren't so much working in the business anymore. You were actually, you freed yourself from that. So now that you could work on the business and you chose to go on the money side of it and really focus your time and energy, which is perfect for this show because clearly, like, that's what I like to talk about. I like to talk about money. And another interesting thing that the audience probably doesn't know that I want you to talk about, you didn't talk about it there. I'm surprised. So you're not just some investor over in Sweden. You're the investor in Sweden that goes and does speeches for Tony Robbins. So tell everybody just a little bit about what you just did with Tony Robbins.
Well, all right. So,
well, all right, I guess.
I'm from Sweden. We don't brag, you know. It's like, this is what we do. This is who we are. So we founded Momentum Property Education because we got so much help from others. I mean, our first few deals went sideways every way possible. And it came from the fact that we were investing from a distance, and I got a mentor who was British. And now I'm not saying it's because he was British, but it's the fact that he lived in the UK and had invested in the UK. So he didn't know the things like how do you project manage from a distance, currency exchanges, tax law, all these things. And a lot of that went wrong. And we were right on the brink of bankruptcy when a friend of mine pulled me to a free, like 3-hour introduction to Tony Robbins event. And I just got so inspired by that event that even though I was on the brink of bankruptcy, I said, yeah, all right, I'm buying a ticket. I'm going to go see Tony. And that was kind of a start for a reset of our company. Before then, just like the week before, my accountant had called me and said, Daniel, it's time to bankrupt your company. And I basically said, well, so what does that mean? He said, well, that basically means we hit a reset button. We start over, and yeah, you'll have a failed company on your record, but you can start over. You can get rid of the debt, which sounded pretty nice. When you're hundreds of thousands in debt, people calling you, screaming, just saying reset would have been nice. But I asked him, what happens to the debt? If I'm not paying it, who does? And he said, well, I guess your investors won't get their money back. And we said, well, we can't throw them under the bus. We got to find another way. And then here I am spending more money to go see Tony Robbins. So my wife didn't let me sleep in the bed that night. But I went, and it went well. I learned so much. Tony just completely changed our way of thinking. And I came back like re-energized with a lot of new contacts. Those contacts led to us actually working with Kim Kiyosaki, who's coming on our podcast now in a couple weeks, which we're super, super excited about. So the author of Rich Dad, Poor Dad, which I'm sure a lot of the audience here has read.
And if they haven't, shame on them.
Exactly. Rich Dad, Poor Dad is, that is the book to read to get started.
Yeah, that's like you have to start there. There's not even an option of not. You have to read that book to get your mind right to take the next step.
Exactly. And that's when you then can get your books and take that next step and build from there. So it was just such an exciting journey. And she actually helped my wife a lot more. Kim works a lot. She wrote Rich Woman. So she works a lot with women in finance. But obviously I learned through Gisela, which was really, really cool. And then a few years, fast forward a few years, and Success Resources, which is the event company that does all of Tony's events outside of the U.S., reached out and said, hey, we've heard that, your life changed at our event. I said, yes, that's true. They said, great. Would you like to speak on Tony's behalf for our international events and let people know who Tony is and what he does? And to me, it was a given. It was, of course, I'll, 100%, Tony doesn't know I'm giving back to him, but I appreciate what he did so much that I want to give back to him and help as many people as possible go see him live, because it's amazing.
Yeah, see that there's so many takeaways so folks, like, to unpack that. I mean, I don't know if you really understood that. So he was on the brink of bankruptcy. He had a decision to make. He could have hit the reset button, which so many people do. And then, I don't mean to say this in a negative way, but you screw everybody that you owe money to, and you just sort of walk away from them. Now that doesn't leave, you might be able to hit the reset button and the attorney says, oh, you just, you wipe all your debt away and you just start over fresh. You got a failed company. But what doesn't stop is when you lay down in bed at night and you close your eyes, all those people that you could have helped, that you could have made some type of, you could have made it work somehow. It wouldn't have been easy, but you could have. But you just said, no, screw you. I'm just going to push on. But you didn't do that because you got your head right. You got your mind right, and you started to think about what you could do. And, as you know, thoughts are things. And, anybody that doesn't understand that, there's another book, Think and Grow Rich, or the Bible, or my God, I could go on and on. There's so many books about, thoughts are really things. It's an actual law of the universe, not something that can be bent, not something that can be changed. Your thoughts, if you focus on them and you really change the way you think, they actually materialize. They can't do anything other than that. So what you did, you went to this Tony Robbins event. You got motivated. You got your mind, set shifted.
I got to stop you just a moment there, Chris. Yes. Something's really interesting for those who are like super analytical and go like, wow, Chris just ran off now with law of attraction and thoughts are things. What is really interesting is me and Gisela were invited to an event called, it's called the Club of Budapest. It was founded by the Dalai Lama and a man called Ervin Laszlo. And it's some of the most successful people in the world. They work with, Sir Richard Branson and all these kinds. And we were sitting down with one of the top physicists in the world. And she looked at us and, we were sitting there talking at the dinner, and she just said, we've actually proven now mathematically proven that the law of attraction is a real thing. So for all those who are like, oh, that's just fluff, there's actually now scientific mathematical proofs to proving that, yes, thoughts are things and the law of attraction works.
I love that you said that.
Amazing.
Yeah. I mean, I'm a math guy. I'm a numbers guy. I prove everything with numbers in what I do. Someone will kind of sit there and try to, debunk or try to, say that what I do for people doesn't work. And I'm like, okay, it's just mathematics. Let's go to the numbers, and the numbers don't ever lie. Well, right there, you just proved that they don't lie. And a lot of people, when you start talking about law of attraction and all this stuff, and like your thoughts becoming things, and they're like, oh, hocus pocus. Listen, like he just told you, it is mathematically proven that it is a law of the universe, no different than the law of gravity, no different than things in motion, stay in motion. Who was that? Newton that said that?
Newton's first law. Yep.
Yeah. So listen, I don't mean to go down a rabbit hole with this, but folks, that's what Daniel did here. He changed one thing, and that was the way he thought. And because of that, he wasn't going to bed sleeping, thinking how many people he screwed. And there's so much to be said about that. And when it comes to money, when you work with private investors, or when you borrow money from anyone, I don't care if it's a bank, I don't care if it's a credit card. What you have to understand is you make an obligation there. Okay. You are going on the line saying, I'm going to make good on this. Good, bad, or indifferent. Love credit cards, hate banks. It doesn't matter. It's your commitment to that. And if you stick to that commitment and you make that commitment work, that says a lot. And because of that, you basically have the ability now to go out and raise tons more money because you don't have that on your record, because you didn't screw those people. Maybe those people would have worked with you. Maybe they would have cut their payments in half, cut their debts in half. It's better than nothing. And if you just show that effort and you put your mind to it, it changes. And Daniel, I didn't mean to go down that rabbit hole, but that's so important because my God, it's like, I'm not going to get into my life story, but everything that's happened in my life is because I thought it that way. I literally put it in my mind and I made it so real that sometimes I would go to sleep and I would dream about what was on my mind, so that literally your thought, your dream becomes real when you're actually dreaming, as funny as that is. And then when you wake up, you're still thinking about it. You ever have those dreams? A lot of dreams you don't remember, but the ones when you wake up and you're just, you can't get it out of your head. Those are the real ones. And then you just materialize it by putting it on paper and thinking about it every day. And if you just did that for 30 days, do you realize that there's nothing else that can happen besides that materializing? Think about that.
What I love is I was reading a book by Jack Canfield, and he talked about, oh, he's amazing. And there was a study he referred to that Virginia Tech did. People who write down their goals and review them continuously make, on average, over their lifetime, 9 times as much money as people who don't. I'm
surprised it's not more than that, to be honest with you.
Well, you'll have to say that's the average, so you'll have some outliers who are probably making, hundreds and hundreds of times. But it's just so amazing to see. It's so simple things. And it makes such an impact on your life.
Yeah. And that's kind of what I like. We're here in the US, and a lot of times, people from the US think that we're the only ones that do this, and we're the only ones that have this. It doesn't matter where in the world you live. I mean, I don't care if I was on the phone with somebody in Alaska that makes millions of dollars. You ever been to Alaska? Not much really going on up there. Okay. It gets dark and there's a whole bunch of things, but he's killing it. But he came from nothing too. It's just over and over again. That's what we get with these podcasts. One of the nice things is you hear the most incredible stories, but the thing that I find with this is, whether it's you or it's God, I've had so many people, and I'm not even going to go through the names, but the pattern that you see with all successful people is identical. It's not a little off. It's the same exact thing. And every time you do that, and I know, Daniel, you probably have had this, you're just oh my God, you too? Oh my gosh, that happened to you too? There's always a pattern, and it's because of this stupid law that we're talking about. But let's shift gears and pivot a little to the law of money. Let's talk about money, how you're raising money. So you figured a unique thing that, honestly, I've heard of, I know what it is, but I've never heard of it used the way you do it. So let's talk about what you're doing to raise money for the deals you're doing in the UK. You're not even doing deals in your backyard, so that's even more exciting.
Well, that's what's fun. And I think in many ways, just to kind of put that into perspective for most Americans, is when I invest in another country in Europe, that would be kind of like investing out of state in the US. So it's kind of the same
You're
principle.
right. You're right.
Just to kind of simplify things. But what's exciting about what you can do is we've identified 25 different sources of capital. I mean, there's so many ways to fund a deal that you can use 20. And I'm not even talking about banks or bridging or anything like that. That's the 25 ways you can fund the deposit of a property. And that just gives you so many options. So for me, when I get a deal, and obviously I'm getting deals all the time, I see it as a puzzle. What you do is you get a deal on your table and then you look at all these sources of money and you say, which one would fit this deal the best? And then you just put it together, set it, and forget it and move on to the next one. And you just keep doing that over and over again. And I was telling you, Chris, about a deal we're doing right now, which was really, really exciting. A new crowdfunding platform just opened in the UK, it's a European platform owned by UK owners. And so they've been using it. They had the license to use it to raise money for their own deals. So they've raised about £6 million over the last 2 years for their own deals. That would be about, say, $7-8 million. Mm-hmm. Then now they just like a month ago, they got the license to be able to do crowdfunding for other property investors. So they're just now for the first time opening their doors for other investors. And so one of the owners who'd heard of me, he'd seen our podcast, he'd seen our Instagram, he's following Momentum Property Education. He reached out and he said, Daniel, look, I want you to come on the podcast or come on the platform because we're just pulling 3 people on from all over the UK. I want you to be one of them. And I think it is a part of that, the fact that if I had gone bankrupt back then and thrown my investors under the bus, I probably wouldn't have gotten this call now. But because he said, look, I know I've heard of you. I know you do good deals. They go through. We want you to be one of the first 3 to do a deal on our platform. Because that's the most important thing for them, is that the deals actually go well. So that was a super honor. I said yes, and we went through the terms. So that's what's always important. Whenever you get an offer of money, because essentially this is someone calling me and saying, Daniel, I want to give you £500,000. And you're going to say yes, right? Mm-hmm. But you have to look at the terms. And he said, well, all right, so what happens is we're going to charge you a 2.5% success fee. There's some small admin fees just to set things up. And you'll have to give an 8% interest to the investors. The loan can be at most 18 months. So I'm going, all right, so okay, so this means I could buy something, I could potentially flip it, there are some options here. But then he said something that really made me think. He said, we will lend you 90% loan to value based on the valuation. So not based on the purchase price, based on the valuation. So that just changed the game completely. So what I realized is I hate selling properties. All right. So I buy them and I keep them. That's because I always say if you sell a property, if it was good enough to sell, it's probably better to keep, because properties on average double in value over 7 to 10 years if you're buying in good areas. But if you sell it now, that means you're giving away as much equity over that time. Plus you could have been making cash flow. And you could refinance and use that money to buy more properties. So for me, it's like, why would you ever sell? So I'm thinking, how can I use this asset now to buy and hold a property? And it's only an 18-month loan. And so I realized there is a strategy in the UK. It's called an HMO. It basically means you buy a house and you rent it out by the room. So think like dorms in like student dorms. So what happens is if you buy a big enough house, and that would be 10 rooms or more, so you have 10 different tenants in your house, then it no longer to the banks is valued as a regular home. It's now valued as a commercial property.
Really? So this is like just a single family home, but a big one with 10 rooms. And because you're renting 10 rooms, the bank looks at it as a commercial, like
yes.
10.
I have to get it licensed to be an HMO. So I'm shifting its license and I have to get it approved by the council. But once I do that, they will then look at my annual rent and go, all right, we'll give you a multiple. And the multiple can be anywhere between 8 times the annual rent up to 15 times the annual rent based on the area. But most homeowners are obviously not valuing their properties on a commercial valuation, right? They're valuing it on what it's worth if they sell it on the market. So I realized is if I could find an HMO that was already tenanted, giving me cash flow from day one, that I could buy based on a regular valuation. If I could buy it at a discount, I could then, in 18 months, I could refinance it based on the commercial valuation, pulling all my money out, paying back the mortgage, meaning I just got a free property. And if it's got cash flow from day one, I can pay the interest monthly, making my offer to investors better, but still not requiring me to put in any money.
That's incredible.
Yeah, so I went to my team.
That's a great strategy.
Go find me a deal. Within 24 hours, I get a deal back. It's got a valuation of £500,000. We just got the bid accepted at 360. So 90% of 500 is about 450,000. So we could borrow up to 450,000, but we're only paying 360. We will have fees on theirs, and we have a bit of refurb to do. So the total deal cost will be about 410,000 pounds. We can borrow 450. And now this is where it got really exciting, because I was sitting with my team and we're looking through the structure. And then one of them said, hey, my solicitor just called me. He said he has a lease option portfolio that just fell through. It's 20 properties that we can have on a lease option if we want. Daniel, what do you think? And I, of course, greedy as I am, said, well, I don't want to pay for it. He said, no, it's fine. We can negotiate away the option consideration fee. I don't know, how much have you spoken about lease options on the podcast? Should I?
Not much at all. No. Yeah. Just kind of give them just a quick background, because I think it's been brought up before, but it's not something that we really have spoke about a lot. So just kind of explain what a lease option is to everybody.
So here in Europe or in the UK, this lease options is kind of considered our holy grail of property investing. Mm-hmm. We love lease options. So what you do, think of it as leasing a car. There are only three real parts to it. It is say four parts if you want to, but you lease the property over a period of time, meaning essentially you're renting. I think in the US you use a lot rent to buy.
Rent to own, or we do lease options here too, but I'm just I'm listening, trying to see if there's the parallel, if there's the same thing.
So essentially what we do is, say you're a homeowner, say you own a regular property and I want to buy it using a lease option. So I say, well, Chris, I will be paying your monthly rent or your monthly mortgage cost. So say it's $1,000 a month. I'll be paying that for you for the next 5 years. After 5 years, I'll be buying your property. And what that then does is it allows us to play with a lot of numbers. We could say, Chris, I'll be paying you a certain amount of money up front. It has to be at least £1 up front, but it can also be 100,000 or £1 million up front. We decide that. That could also be a cost that gets then deducted from your purchase price or not. Then for the period of time, I could be paying you, I need to pay you at least $1,000 a month because I need to know that you're paying your mortgage, right?
Right.
Because if you're not paying your mortgage, all of a sudden the bank calls and says, we now own this property. And even though I put in lots of money, I can't do anything because banks always come first. So I'm saying, no, I'll pay $1,000 a month to the bank to make sure the property stays mine. But I could be paying you a premium as well and saying, hey, Chris, I'll give you an extra $200 a month. Now, as soon as we do that, I now have control over this property. And if we set a 5-year term, it can be a 6-month term, it can be a 20-year term. If it's a 5-year term, for 5 years, I now control this property. For all intents and purposes, it's my property. But then at the end of the term or any time during, I have the option to buy. And it's a lease option, so it's not a lease obligation. I don't have to buy. I have the option to buy. And we will have negotiated that purchase price already at the start. So we might have said, all right, in 5 years, I'll buy your property for $150,000. Well, it might be worth $150,000 now, but in 5 years, it's probably going to be worth more. Or if the market crashes, I can say, well, it's only worth $75,000, Chris. I'm not giving you no $150,000. I'm walking away. Thank you for the 5 years of cash flow. And so what happened with this deal was that originally they wanted £2,000 per property. But because this portfolio is underwater, so they have more mortgages than they have value currently, we were able to negotiate that away. We'll take over the properties. We'll do a little bit of refurb. And then we'll have about £4,000, well, £3,800, so say $4,500 a month of cash flow that we've essentially gotten for free. It's going to cost us about £5,000 of legal fees and another maybe £20,000 in refurb. which if you look back at my old deal, the crowdfunding HMO, is about the margin I could pull out from that deal from the crowdfunding platform, which is exactly what we're doing. So we're using that deal to then pay for this, meaning I'm taking over a property. The HMO will have about 2,000, well, after the cost of the interest rate for the loan, we'll have about 800 pounds a month of cash flow. So say $1,000 a month of cash flow. We're now adding another 4,000 pounds or so of cash flow to that. And then in 18 months, we get a commercial valuation for the HMO of at least 650,000 pounds, meaning we can do a regular loan to value, pay off the entire crowdfunding platform. We now have our property, which is just a regular mortgage, making cash flow, and we still have the lease option portfolio making us 4,000 pounds a month.
So we do that here, and it does work. But and I've got a lot of lease options that I've done. Most of them are done different than the way you're doing it, though. So normally I'll own the property, so I'll be the person owning it. But then I'll do a lease option for somebody that actually comes in that wants to buy it. So right. I'm actually doing this lease option to people and giving them that right. But most of these people are just individual owners. I never really thought
we're
about
actually doing one which is really fun. On this portfolio, there's a couple of the properties we don't want to keep. Mm-hmm. So we're doing what's called a sandwich lease option. So we're lease optioning the properties in, and then we're going to put a tenant in there who's going to lease option the property so they're renting to own.
Okay.
And so we're going to have them pay us a premium rent because they're getting the option to buy. And then we already know what our mortgage is. We know that it is underwater, so we're going to ask them to pay us a premium because they can buy it in 5 years. That way, we kind of lock in that safety. And yes, if they walk away, that's fine because we'll still have had 5 years of premium cash flow that allows us to stack up to pay down the mortgage.
That's really smart. Yeah, no, it's I've never used it doing it the way you are, but that's actually really smart. On the other side of the coin, you're basically coming in with that option. You're doing the lease option. You're doing it in an entity's name, I would assume.
Oh yeah, we're using a company, but usually the people on the other sides, the people we're doing business with, they would be individuals.
Correct. Yep. So, and then you're just putting a tenant in there, and you can even make a spread on that too.
Exactly.
Is that how you're doing that?
That's where those 4,000 a month are coming in because that's net cash flow after what we're paying to the owner. And
that's really smart. I don't think I've ever heard anybody really doing that. I mean, they do something similar with a sub two, and I guess it's kind of the same concept, but you're just taking it and refining it even more than that. So I love it because we do lease options with people that we're selling our flips to. If we can't get what we want for the flip, we'll do a lease option. That way we cover all of our costs. We make a spread above and beyond our mortgage. And then at the end, we basically do it. I'm actually closing on one next week that will pocket 60 grand. And we've been renting it to these people for 5 years now. So, it works both sides. You can do it as the owner of the property and do a lease option or as the buyer. Man, I love it. That's really smart. And actually, we could actually stop right there on the money side and that would be enough for the audience. But let's go one layer deeper. Let's talk a little bit about brand new real estate investors, because one of the biggest things, and you see this because you're an education company, one of the biggest hurdles that a new investor is always thinking about is, I don't have money, so I can't get into real estate. I need to have money to get into real estate. Well, with that strategy, you don't really need money, but what would be another strategy that would work really well for a new investor who's kind of green, just coming into this? Maybe they're one deal or no deals, and they're trying to say, I don't know how to do this. I don't know where I'm going to find the money. What would be your advice?
Well, this is where property gets so exciting to me because there is so much you can do. As I said, we've identified 25 different sources of capital. One of them is your own money. So I have a lot of students come in who have a lot of money. And for them, it's very easy. You just tell them, here's the team, go buy deals, and they're fine. Then we have a lot of students. I have a great example is I have two 18-year-olds. I think he's 19 and she's 18. They're brother and sister. They've decided to do this together. And they, literally just gotten their first job. So they don't have really any money. They actually had to bring in an investor to pay for their course, which was really cool. And it's not like they brought on their mom. It was like they went out and literally sold an investor. And I actually coached them through that process, which was just really, really cool of them. And so then, now they're sitting there, they've already brought in an investor, and all they've got, so to speak, is an education. So now we got to look at how do we now do do a deal. And there's two sides to that coin. When I talk about the 25 source of capital, that's just the money. Then there are lots of ways you can buy deals, no money down. Like, you can do lease options, you can do rent to rents. There's a lot of things. But so they're looking at doing rent to rents, because then they rent the property and they rent it out. So it's only going to cost them 6 months rent to get into the deal. So it makes their job a little easier. But what we always teach everyone when they're going to start, whatever you're going to start, this is kind of our like success principle or success formula. We call it KAP. KAP. And without following this, you're going to fall. Every single successful person I've ever spoken to, without knowing without using calling it what we do, they follow the same things. And it's just the K, it stands for knowledge. So never do anything without understanding the deal. So you don't get into property without learning from someone who knows what they're doing. Like we teach people here in the UK and in Sweden and in Europe how to invest in the UK. Without that, if you don't know what you're doing, you're going to lose money, like I did when I started out. That's why I'm so passionate about that. If you're investing in the US, you're literally giving them 2 books to learn, which is awesome. So, just if you're listening to this, if you feel like you don't really know what you're doing, but you want to get into property, well, there are 2 free books. Go grab them, learn how to do it, get the knowledge. That's step 1. Step 2 is what you said there at the beginning. Without action, there is no result. That's the A. A is action. The third one, and it's actually funny when we created this, because the Swedish word for money is pengar, starting with a P. So everyone, when they saw KAP, were thinking, it's knowledge, action, money. But actually it's people. And people will be the source of all your deals. Like, I have my team. I just give them a call. I tell them I need this exact type of deal. I need a 10-bed, fully tenanted HMO that I can buy on a discount from the regular market value, and then I can increase the value with a commercial valuation. 24 hours later, I have the perfect deal. That's what people does for you. But they're also the source of all your capital. They're also the source of all your money. And I use people, but that's companies, that's institution, that's crowdfunding platforms, business angels, all these things fall into that category. So what I would do if I was looking as a new investor, and I know I have the knowledge, I hopefully have a mentor. So as someone looking me over the shoulder, kind of going like, all right, this deal is good. This is a good builder. This is how it's going to work. Now, when you have that, you're ready to take action. You take that step. All you have to do is you look at, how am I going to fund this deal? You look at these different ones. The usual start, kind of the start kit that most people start with, is friends and family. So you bring in someone. A lot of people talk about bringing on people at a fixed interest rate. I did that, and I offered a way too high fixed interest rate. And that was a big reason why I almost went bankrupt. Because what happens is, Einstein called the compound effect the most powerful force on earth, right? And that's what we do as property investors, right? We're making 10, 20, 30% per annum, and it just compounds and we get wealthier and wealthier. But what happens when the interest rate you're paying is higher than the income you're making? All of a sudden, the compound effect is working against you.
Then you're the other side. He says, those who understand compounding earn it. Those who don't, pay it. So you kind of, you went on the other side of the coin.
And that's what happened to me. I was borrowing money at 10%, and then I was doing these deals, and essentially I took 300,000 pounds and just burned it on the side. I just got ripped off, and all of a sudden now I have 30,000 pounds a year I owe with 0 income coming in, and my other deals weren't enough to compensate. Mm-hmm. And so now that debt was now snowballing, and it was getting worse and worse. And that's why I was so stressed out of my mind. But so I don't like my students want to borrow at a fixed interest, because I know that sometimes property deals go wrong. You can, and if they'd gone right, and now most of my deals go well, so I'm fine. But you have these learning experiences. And if you're making 20%, you're borrowing at 10, you're fine. But what happens if you're only making 8? That's when it's no fun anymore. So I tend to recommend you use one of 2 other structures for it. And is it all right if I go into a little detail?
Yeah, please do. No, this is good stuff.
Cool. So I use 2 other structures for how you could do it with friends and family. One is you do a joint venture. So simple enough. You just say, so Chris, you and me could do a joint venture. You say, I just tell you, hey, Chris, I got this amazing deal over here in the UK. You want to diversify your portfolio. If you give me $500,000, I'll buy us this property. We'll split the cash flow 50-50. But if we ever sell or refinance, you get your $500,000 before I do. But I'll take care of everything. You don't have to think about it. It's completely passive for you. That's a decent deal, right?
Yeah, it sounds
You wouldn't
good.
have bought anything in the UK without me. Well, you probably would, but most people wouldn't. So you're getting access to a property, a deal that you probably never would. And your return is probably going to beat the stock market anyway, because properties generally beat the stock market. If you invest in the stock market, I apologize, but that's just the numbers for you. Generally, we have a higher total return.
I do invest in the stock market, but very different than what you're thinking. I don't believe in the stock market for a long term.
Yeah, no, it's a very different type of investment, but most investors will get more money investing with you that way. So for them, it's a great deal. But what happens if the deal doesn't go according to plan? Well, that investor can't call you and say, Daniel, you now owe me money, because you don't. You're a joint venture. You're in the deal together. Now, that does require very good communication. If things start to go sideways, you can't hide it. You have to tell them. It's about honesty the whole way through. They are literally your partner, so you got to treat them that way. Now, they are the silent partner, but they still have to be an updated partner, and that's really important. So that's one way of doing it. Now, a lot of my students go like, well, am I giving away control? I want to own it. It's mine. And that's fine. I'm very happy giving away control. I'm happy taking a 20% cut of a £100 million deal. We're actually looking at one now, and my ownership will be maybe 15-20%. And I'm pretty okay with that.
Yeah, absolutely.
But a lot of people, they want to have it for themselves, and that's fine too. You can build your own legacy, your own fund, your own control, and that's fine. So what I would recommend doing is either you do the joint venture and you add an opt-out clause, where you say at any point, Chris, I can give you your $500,000 back and we're done. You will have gotten cash flow to that point, and then it's over. Or we might even add a premium and I say, I have to give you $550,000. Mm-hmm. That way I can wait till the property appreciates in value, refinance, and give you your money. And then I'm free. I have the property for myself.
I've done that a bunch.
Yeah, and that works really well. Something else you can do is you can kind of combine the two. You say, well, you could do joint venture or you could give interest. You could do a combination. You say, I'll give you a low interest. I won't give you 10. I'll give you 3, meaning you're getting more than you're getting in a regular bank account. So I'll guarantee you that return, which that you can probably feel pretty secure about as a property investor. A lot has to go wrong for you not to make 3% per annum. Mm-hmm. But then I'll say, I'll also give you 30, 20, 15, 100, whatever percent. Well, probably not 100% of the cash flow, but I'll give you a percent of the cash flow. Again, that ties what you're paying into the result of the deal. And so the way I always do it is I make sure if the deal goes well, if it goes according to plan, they're going to get more than I would be offering at a fixed interest. But if things go wrong, I am really safe. So I'm happy to give up. One of my deals, the investors are going in with money now. They'll have all their money back in about 18 months. And then they'll get, as long as we own the property, they'll be making 12% per annum. And they will have already gotten their money back.
Yeah, they'll like that. I mean, you could just use almost like a gross rent multiplier to figure that piece out.
Yeah, and that was not a hard pitch to bring on those investors. The hard pitch was to prove that I wasn't ripping them off because it was too good to be true.
Yeah.
But once I then pay them their money back, how many of them won't be coming back and saying, Daniel, I want another deal? And by the way, I have 5 friends that want the same thing.
Yeah, no, absolutely. That's great. I mean, these are just really creative ways to get into the business, to finance your deals and to do this. I mean, a lot of people are just seeing, one dimensional side. You're like looking at all different avenues. Like I said, with that lease option thing, I'm doing it. We do that here in the States, and I'm sure people are doing what you're doing, but I never thought about that. And it's just reversing what we're already doing. It's really, really smart. And it will solve, especially with what's happening now.
Yeah, well, exactly. Imagine how many people now who are losing their jobs and who are going, how am I going to pay my mortgage next month? And what will happen to most of them is they're going to have to give the keys back to the bank, and then the bank is going to sell, and then the bank is going to come and say, hey, you still owe me $20,000.
100%. And
what you can do instead is you say, hey, look, I'll just stop that foreclosure process. We'll talk to the bank. I'll start paying your mortgage on your behalf, but I will take control over your property. you have to leave, and then I'll buy it in the future and I'll pay off your bank. So essentially what you're doing is you're saying, instead of them having a failed mortgage and a $20,000 debt, you're just saying, look, I'm just bailing you out. And then you might be a nice guy and say, look, I'll give you $5,000 to restart your life. You can get a rental, you can pay, a rental deposit, and you can get into a new property. But essentially I'm taking you from bankruptcy to being able to start over. And that's just such a gift to give to someone. Mm-hmm. And at the same time, you get amazing deals because they're just going to be happy to get their mortgage paid off. So you don't even have to pay them a premium. You just say, I'll just pay off your mortgage in 5 years. And then you don't put more than whatever you give them to start their new life up front. So you're saving someone's financial life, and you're getting a deal essentially for free.
Wow, I like that. I like that a lot. This has been great stuff. I mean, dropping some golden nuggets here. And it's folks, like we said in the very beginning, he's doing this in the UK and Sweden, in the UK, like not here in the States, but the same principles are applied here in the States and there. You got to understand, remember, money is nothing more than a means of exchange. Doesn't matter whether it's monopoly money or green money or greenbacks, whatever the heck you want to call it. Yeah. So, or it could be the funny money up in Canada. It doesn't matter what it is. The philosophies, the strategies, and the concepts are all the same. Just learn how money really works, and you will be surprised at what happens. So, Daniel, how would people go about learning more about momentum property?
Well, thank you for asking. I mean, thank you everyone for listening. If you want to learn more from us, we have a podcast called Momentum Investing Podcast, which we're super honored that Chris is going to come on. And instead of you just hearing him interviewing a bunch of people, he's going to share his nuggets and secrets. So we're super, super excited about that. We have all kinds of guests. We got Kim Kiyosaki, the author of Rich Dad, Poor Dad, coming on in a couple weeks. We got Jordan Harbinger. We got experts. We try to combine it with like these exciting property experts, but also property portfolio professionals. So we've had an interior designer, and she showed us how you can increase your rents on your property by about 20%, just without spending more money, just tweaking how you decorate your properties. So that's a great way to do it. Otherwise, we have our Instagram. So it's just Momentum Property Education. And if you want to start investing internationally, we have a Facebook group called International Property Investors. You can either search for that on Facebook or just go to the Momentum Property Education Facebook page, and you'll find a link there. And you can join the community, join the conversation. We have some amazing groups. We do live Q&As every single week. We do videos every day. People ask questions, recommendations, partners. There's just so much going on there. So that's super, super exciting. So that's it. The Momentum Investing Podcast. It's available on all podcast platforms. You can go to the Instagram, Momentum Property Education, or the Facebook group, International Property Investors.
So there you have it, folks. Now you know how to invest internationally. Daniel could be your guide, your mentor, and walk you through it. And otherwise, I mean, you just learned some serious things to consider. Even if you have no money, now you know how to get into this business and get resourceful instead of worrying about your actual resources. So let's go back to that challenge, folks. I gave you the opportunity to get 2 books, The Private Money Guide and Mapping Out the Millionaire Mystery. 2 different concepts, 2 different strategies. Both will change your life. The question is are you going to take the action? The book's free. If you want the actual copy of the book, you pay the shipping to get it to your house. So how you get that is you go to chrisnaugle.com. It's NAUGLE.com. Click the resources tab, scroll down 2 swipes, free books, and there you have it. So we'll see how many of you are actually action takers and how many of you are just here for I have no idea what reason, but you need to decide what side of the fence you're on, because the action takers are the ones that are actually going out there and changing their financial futures. And I think that's you. So folks, thank you so much for joining us for another episode of the Real Estate Money School. And Daniel, thank you for being on.
Thank you so much.
All right. We'll see everybody on the next episode.